And the Central Bank of Nigeria is the latest central bank in sub-Saharan Africa to announce its monetary policy rate decisions as the world grapples with the coronavirus pandemic. The bank cut its main lending rate by 100 basis points to 12.5% and left every other parameter unchanged. Joining me now to look at sub-Saharan Africa Central Bank's responses so far to the fight against the effect of COVID-19 is the CEO at Core Street Analytics in Nairobi, George Bodo. Good afternoon, Mr. Bodo. Thank you for joining us. Well, in the last couple of weeks, central bankers in sub-Saharan Africa have sat to deliberate on the monetary policy environment in the fight against COVID-19. South African Reserve Bank slashed repo rates by 50 basis points. Ghana left its rate steady at 14.50% and cut its policy rate by 225 basis points. Kenya left its rate unchanged at 7%, and just yesterday, Nigeria cut its benchmark rate by 100 basis points. What strikes you most in these moves by African central banks?
The most striking thing is the fact that there is a general belief that the best way to fight a public health crisis is to print more money. So that's the most striking thing, and that's why you're seeing a number of central banks in sub-Saharan Africa are moving towards what we call a monetary policy easing. And you've seen, you've counted a number of central banks that have gone this route, latest being the Central Bank of Nigeria yesterday. I think the key thing here is that as most African countries in the region realize that there is very limited fiscal space to respond to the current crisis. So the next best is to ease the monetary policy stance. And that's what you're seeing. And for instance, Kenya, yesterday when they met, 2 days ago when they met, they left the benchmark rate unchanged. And this is because it came off the back of two quickfire moves, which saw them cut the policy rate by about 150 basis points in two consecutive meetings. So the argument was, look, we've done these two quickfire moves, let's give it time to seep into the economy. And that's the basis why they decided to hold the rate 2 days ago already.
Now, on a broader scale, how do you see most African countries navigating this challenging time, especially given their vulnerability with volatile commodities?
I think that on the broader side, by African governments, you're likely to print money because they don't have, as I say, they don't have any fiscal space to. I give an example. South Africa, just a couple of weeks back, unveiled almost $29 billion economic stimulus package. And part of this was, part of it was financed by borrowing from development finance institutions, and part of it was reallocating the budget. But a good portion of this was that the central bank would also buy government-issued treasury bonds. By the way, we've seen Ghana also go this move. The Bank of Ghana has so far bought treasury bonds worth almost $1 billion. And so you are likely to see this trend of central banks. But then in Kenya, the central bank also is almost going this way. We've seen insinuations that they're likely to unveil some form of an SME guarantee scheme. But the best way, because Kenya, for instance, is a country which has zero fiscal space to respond to the crisis. And one of the calls I've made is that the central banks need to print money for the government to respond to this. Thank you.
All right, thank you very much, George Bodo. George Bodo is the CEO at Core Street Analytics in Nairobi. Thank you for your time.